Okay, well, the 17th of February, the year's already started and we're halfway through Feb. So, hopefully the sound is permeating well. Good, excellent. Okay, so really, we're going to carry on a little bit from last week. Okay, so once again, the main questions that I get asked: what are good times to trade? How to find good trade setups. So let's bring up a chart. Okay, so 5 minutes with the 5-minute river, which is the lime green and pink, that wriggles within the 1 hour, which is the white. Okay, so the 5 minutes still beats to its drum, but it's dictated to the same destination as the 1 hour. So in the 1 hour, we don't see all this detail of the journey. So whenever a diamond goes outside the 1 hour, you can always expect that it will want to desire to come at least the river center line. Yeah. So if when alerts come and we see that the diamonds outside, say, both the 5 minute and the 1 hour, we'd assume, well, quite high probability, price will want to come back to the center line, yeah? At least, if not further to the opposite riverbank. Yep. So that's its characteristics. That's most currencies. Okay. And that's their innate. They want to get back to average, which is the center line. Okay. But like all things, they have a tendency to overshoot and then correct itself. Much like a rocket or a shuttle in space, it has to keep correcting itself and it doesn't go in a straight line. Okay, so for this, we can customize to each to our own needs. So if you wanted the alerts to go and give you an alert where there's a good chance that the diamond would be outside both the 1 hour and the 5 minute, or the 1 hour and the 15, I currently have it set under 5 minutes. The alert to come at a very high threshold, yeah? So a lot of times they'll be the same as the 1 hour. Okay, so it's not going to keep giving an alert unless it's actually either at the extreme of the 5 minute river, and a lot of times that same diamond's outside the 1 hour. But the 5 minute, still being a fractal nature of the 1 hour, it means it has its own behavior, which is the same, that when it gets outside the river, it will want to come back in. Yeah. So yeah, you can see diamonds gone outside, diamonds gone outside, diamonds outside, diamonds outside, diamonds outside. Okay, so whatever happens to 1 hour happens to the 15, happens to the 5. It just keeps repeating itself as if it's trying to go and say it enough times so we as traders actually get it. Okay, so the charts are designed and adjusted once again to highlight this characteristic so we can utilize it. Okay, so bringing that all together, what we have is, if I just reduce it a little bit, so we can see this diamond at the beginning of close of Friday or Saturday morning, the Friday's US session. it went outside the 1 hour river. It's outside the 5 minute. Yeah. Now, when we look down at window 2, the shading is showing that the 1 hour has reached a high. Okay. The 1 hour and the 30 minutes both reach a high. And because it reached a high, it wants to come down, which, as we know, when the diamond goes side, it will want to come at least to the center line. So once again, window 2 gives us and confirms that the momentum and the desire of price actions to move downwards. Okay, it didn't quite reach the riverbank on its first go in the morning, but you can see by tonight, or in the last 45, 15, 20 minutes, it's reached and went below and actually got to the other side of the river. Okay, so it's determined. To go down, it did go up. Okay, corrected itself, and that's the way price. And because it does this, gives us opportunities if we understand the nature of what it wants to do, and when and how to know when it's doing it. And the river is a very good guide. So up here, it's an extreme high. It's outside a 1 hour time frame. Window 2 gives us the direction of momentum, or the lowest diamond, now the highest diamond. Okay, so it'll remain green until it attains a high diamond. It'll keep showing pink shading until it reaches a low diamond. Yeah. Okay, so this is showing us what window 1 is showing us. There's a high H1 diamond and a low H1 diamond. Okay, so if that's a high and it's looking for low, when we get a diamond that's outside the 5 minute river, that's a really great opportunity, because it's going where the 1 hour wants to go down. Yeah. So with that bit of information that's recurring, and visually we can see it, it's given us more than one opportunity to enter a trade in the strongest direction possible, where a profit's guaranteed. Yeah. Okay, so this together with your trade management lines when you enter a trade, because remember, there are things on the chart that you use to apply your trade management. So confirm vertical red line, marks the candle whose open price you use for trade management. Yeah. If you have a diamond entry, the diamond itself marks the candle that you use for trade management. All right, so let's do one of each. Oh, we can use this diamond. Okay, so that diamond not qualified. Oh, orange line needs to be above. Let's go to that one. Okay, orange line above, dotted yellow or pink center line, shading in window 2 with both lines in window 2 in the same quadrant, or the same, is below the 0 mark. Yeah, so it's in the same zone as the pink shading. Okay, so it's a jumping diamond. Yeah, and it requires window 3 and 4 to have pink shading, which it does. Okay, so Okay, so 20 pips or channel. So 27.3 is the greater. So I'll take profit 1 for 1 will be 27. Yeah. So we mark it down to 27. Okay, so 27's there. Stop losses there. Opposite riverbank is a target. Okay, so there we have it. Okay, if we use the vertical line confirmed. Okay. Okay, so our stop loss here is channel or 20 pips. So 20 pips is just okay, so it must be going on 7:15. It's going to give us an alert, so the screen is frozen, but when it unfreezes, we'll find it. In any case, let's get ready and move that up. Okay. Okay, so we're putting trade management line. Okay, so pretty close. Okay. Screen just froze again, so let's, yep, there's an alert. So this, okay. $20 pips, 40 pips. Okay, so it's nothing that we haven't seen before, okay? Opposite channel line. Okay, so once again, diamonds, vertical lines, okay? And the other one is the timelines, yeah? So here's the timeline. So let's move there. So once again, the timeline is the line that will appear at 6 p.m. and the green one will appear at 10 a.m. So the time when they appear, we assess the candle that the line is marking, okay? And whoops, let's just move this down. Let's get rid of some of these lines, okay? So open price for the candle that's marked. It also happens to have a diamond on it, but the diamond might have appeared later in the candle, okay? But the line would have been there. And once again, open price to channel 20 pips or channel. In this case, channel. Okay, so a 1-for-1. Down there, yep. Okay. Here's our 1 hour river. Okay. And it's a jumping diamond, so it has to go, wants to go lower than here. Okay. So once again, to there it's 10 pips, to there's 20 pips, here's 1-to-1. Okay. So we didn't get a 1-for-1, but following our rules of exit and expected bounce points, we were still guaranteed that there was a profit there, yeah? Okay. So they're the free visual alerts that mark the candle to be assessed and all trade management lines from there. Okay, so really, with what we already know about how price action likes to move, there's really, we don't need to ever guess. If we find ourselves at a point where we need to guess, then we should close the computer, call a friend, or open and come back later when we get our mind back, because must obviously have gone somewhere. We've forgotten the basic things that we can see, when we're not deciding that it wants to go somewhere that it doesn't want to go. So if you ever feel like that, just zoom out so you can get the big picture of the multiple rivers. Like in the 5 minutes, you can see both the 1 hour and the 5 minutes. Use the multi-chart. Okay, so in the 1 hour, you can see price action goes outside the river. It definitely wants to come back in, whether it's the candle after or candle after, it will want to come in. Okay, and if it's solid green center line, it'll either touch and bounce off the river center line or pierce it and then bounce off it. Okay, and vice versa. And because the 1 hour is doing that, you'll see it in the smaller time frames. Yep, here's the same high that the 1 hour had, and you can see the same river, and you can see our prices moved in there. Okay, when I got this diamond with the spike, what we call the gap trading, yeah, I'll always try to get back and breach the gap and then move in the direction it wants to go. Okay, so coming from outside, it wants to come, and if it's gone to the extreme outside, generally I want to get to the opposite riverbank. The 1 hour would like to do that, and its movement downwards looks like that in a smaller time frame. Okay, and we have our criteria and we just apply it. Okay, so everybody like that catch up with regards to just the most obvious things you can see on your chart and how to use them. Now, if you just use those, you'll find yourself in a rather good place most of the time. Okay, so now really that's all we need to do. Okay, so the main thing is when you see all this, you think, wow, there's so many trades, I want to get all of them. really you only want to do one trade per day, per week, or per couple of days, you know, and to ensure that you have risks what you're comfortable with and know what the expected payoff is and how that fits into your monetary goals, lifestyle goals, yeah. And then from there, work out what the minimum trades you need to take to achieve that. Okay, so any guidance, just post and ask. And it's always two heads are better than one in that case, because you need to have something, an objective feedback and any additional information that may not have been obvious to you. All right, so there's nothing to be shy about. If you've got goals to achieve, be aggressive, ask the question, be bold. Okay, so these timelines appear, so you don't have to guess or wait and wonder when it's going to happen. You know exactly what time they happen, and if one of those times suits when you'd like to go and see there's an opportunity, then just turn up at that time, 5-10 minutes before, assess the trade, and you've got those lines in in each of those time frame charts, H1, M15, M5, etc. Okay, so in the M15, you can see 10 o'clock yielded a trade. The 6, probably not in this case. The 10 did there. Okay. Over here, at the time it may have yielded it, but a couple of candles later, it certainly would have met all the criteria. Okay, so over here, the 15 didn't give it to us, but the 5-minute probably would have given it to us. All right, come on, 7:25. Okay, so 11th of May. So let's drop that to the 5, because the 5-minute would have been running at the same time, so you would have had to see it. All I'm doing is just showing you some correlation between the. Okay, so here's a yellow line, and you can see in a 5-minute there was actually a low diamond outside the river. Okay, so that would have yielded a trade. Yeah. Not too shabby, even if you remember, if price goes outside the river, at least the river center line with the higher time frame, the H1, and you can see just going to there, you can see this is a 50 pip trade. Okay, so and just going back to its time frame for this 8-hour report template. I'll delete that, but you can see here, price action has actually gone outside the M15 river, so it's easy for me to feel and think quite positively that in a 5-minute that would have been a low or an extreme price action through the 5-minute chart, because I can see it's gone outside the 15. Yeah. So once again, these are timelines around an expected busy and opportunity laden time where price does consistently move, around these 2 time frames. Okay, so if you want to go and have more control of what time you turn up and what time your working hours are, this just gives you, okay, over here that day, get two nice little trades just using the time vertical lines. Yep. So that's really what today is about. It's just once again showing you what your current templates are very capable of and how to utilize them in a very straightforward manner and what things to look for. Okay, so the one change you may have to do is just go to your white H, put your pointer on it, right click, and just change the ATR multiplier to 1.236, yeah? Once again, it's the most, the first point of support and resistance in the Fibonacci expansion, okay, 23.6. Okay, so price can go further, yes, but certainly when it gets to that area, there's a very good chance there's a reversal. Okay, so once again, bringing that in line with the threshold of our diamonds, it makes it stick out and teases that information that's already within us. Okay, so there are your free alerts, which once the criteria is met, you place your trade management lines and measure what profit there and expected rate of return on the trade, because this is a business, we need to know these things and what the appropriate risks that we have to attain our expected return. So today you can see there's quite a few entries that would have qualified, and that's just an M5. Yeah. Okay, 7:30. So once again, we've got a bit of a frozen screen as the alerts are trying to go and give us a pop-up box. Okay. So here, 30-minute didn't really give us any opportunity to enter. Our 5 did, and our 15 did. Yeah. So between the 5 and 15, visually there's 5 to 7 qualified criteria met trade entries. Okay, that's just one day, yeah. And if you want it just in the morning, once again, whatever we apply to others, okay. So yeah, even this gap fitted the criteria. Okay, so just an example, the same things that we saw in Pound Aussie apply to other currency pairs. Okay, so here, 10 o'clock vertical line, the 5 o'clock, the 6 o'clock didn't yield. Our diamond entries were productive. Yep. Okay, so yes, so it's straightforward, easy to remember, and if it's one thing to remember, it's a good way to go and do it. And just remember, for jumping diamonds, you need the two lines to be on the same side as the shading. Okay, so over here where the yellow and red lines are on the same side as the green shading, that means we can have jumping up diamonds, yeah? Yeah, we can have jumping down diamonds, yeah? As long as the rest of the criteria is met, which means here criteria is met, so we could have actually taken that trade, yeah? So measuring it 5 minutes, 4.2, you know, I want to go lower than that, get to the center line, get to here, okay, and then our balance line's down here. Okay, so yeah, price might find some resistance, this big one. At that, if you're going Aussie in a 5 minute, 10 pip stop loss, 10 pip, so you'd be approaching 40 to 50% return. So once again, expectation is at least the center line an open percentage, and if it pushes through there, down to there, yeah. So okay, so it's 7:33, and I don't really want to dilute the main objective is to highlight how to identify setups, where to see them, how to see them before they happen, and how to apply that knowledge. Okay, so yeah, and the super high probability ones, as you can see, this is an extreme outside the H1. Price is definitely gone there. Let's move on further here. Okay, so thank you for your time again this week, and we'll see if there's any posts or questions with regards to that. All right, so good trading, and keep it simple. Simple becomes routine. Okay, take care. Have a great week. Good night all.